Today on Investor Tribe Podcast, we're going to talk about death, taxes, and insurance. But I think we're going to skip the first two, just talk all about insurance.
Yeah, I definitely agree.
Late night grind, got the cash in the flow. Flipping these dreams, what's the portfolio grow? Brick by brick, stacking wealth in the zone. Investor Tribe, OBS, where the hustle is home.
You know, one of the things that we always talk about when I'm buying a house or you're buying a property here, and we always talk about insurance, right? And you know what we don't talk about when we're kind of talking about everything else, like the podcast or whatever else is going on in our lives, you know what we don't talk about?
Insurance. Just only when you need it. It's
Only
there.
when it's
You
there.
want to make sure you got
Only
it when you need it.
Right,
Or if
right.
you're borrowing money, you know, the lenders need it. It's got to be in order. You want to make sure you're covered, your assets are protected.
Yeah.
And so Mike's here to talk all about that today, how it works, the ins and outs of insurance, how he got here, the type of services they provide.
And that's going to work out perfectly. So we have Mike DeVito here today with Commonwealth Insurance, and we want to welcome you to the podcast today.
Thanks for having me.
Yes. And so can you kind of get into how you got into the business?
I got in the business because, you know, when I grew up, I always wanted to be an insurance agent. So I was working for a corporate company. They had a corporate merger and kind of saw that they were going to sell the company. My brother was doing insurance. He'd been in the business for about 2-3 years and said, hey, why don't you come over and give it a shot? So 12 years ago, I decided to make that jump into the independent insurance industry. And 12 years later, it's going great.
That's amazing.
12 years.
12 years. And it's pretty cool. And we wanted to kind of get into how things have changed in the last 12 years. If you think about full disclosure, you wrote policies on I think over a dozen of my houses over the years, right? And so I called you most recently about the hailstorm that was in northern Louisville. That was all over Louisville, but it hit really, my area really, really hard. And I had to call you for that, and you were able to get me taken care of. But I'm sure these weather events over the course of time has been absolutely just completely different than when you first got into business. Or has it been all the same?
No, absolutely. It's changed. I mean, you always had that once in a decade storm that would hit, and, insurance companies were covering the claim. But over the last probably 4 years, we're getting those storms every 3-4 times a year. And we're seeing a lot more claims, which is you're starting to see insurance rates change, coverages change. Some of these insurance companies are, increasing deductibles or, maybe going actual cash value on roofs, but trying to offset the cost of claims to keep the insurance pricing down. Otherwise, you're going to just see increase after increase in rates.
Yeah. So it's interesting that we're having this conversation at this pivotal time as you think about investors, as you think about our lives and how it relates and how we need a lot of insurance for our properties and taking care of that. Are you noticing a little bit more stringent? I notice at least what we're seeing is a lot more stringent overriding, underwriting policies and flat denials in some cases,
Or exclusions or different pricing. You guys, there's been a lot of storms. You guys have run a lot of claims, and I guess you explain how the insurance industry works to us.
Thank you, because I was trying to get to that, and I was like, oh my, how do I articulate that? Like, how does insurance work? Because I know that there was a time that there wasn't insurance.
Insurance is going to work. If you're going to insure a property, we're going to, run a replacement cost estimate and make sure the house is going to be insured for a rebuild cost. But what we're seeing change-wise on, you said exclusions. If a lot of insurance carriers, the roof's over 15 years old, are going to put an actual cash value endorsement on your policy. And we're starting to see the 1% wind hail deductibles applied to insurance carriers. So what they're doing is, if you've got $500,000 house and the roof's 17 years old with an actual cash value endorsement, you're going to have a $5,000 wind hail deductible. Then they add depreciation to the loss, so you're not going to recover that. So you may be, if you've got a $15,000 roof, you might be $8,000 out of pocket. So that's where we're seeing the insurance companies putting more money on the actual clients to pay for the claims. Just because you're seeing multi-billion-dollar losses with the storms the way they've been in, and the insurance companies are trying to offset their loss. So everybody's not paying $5,000-$6,000 a year for insurance like they are in Florida.
And you actually can insure properties in Florida. I know you said we're based in Kentucky here, so you did Kentucky, Indiana, Ohio, Tennessee, Florida. You do kind of the whole region or south, a lot of states around Kentucky, it sounds like.
Yeah, pretty much go down the entire South Coast all the way from Ohio down. And then recently we've got licensed in Florida, which that market's been tough. I mean, there's only a handful of companies that will still write business. Insurance is expensive. But it's kind of, see how the hurricanes are in Florida. You see why the insurance companies don't really want to write business in the state, but they still are. You're seeing pretty high insurance premiums.
I talked with a developer last night. We went to a neighboring city, and he had a development, and I think his insurance quote or price was initially $17,000 before they started breaking ground and got the project done. And then they reevaluated things and the price of these buildings and where it was. His insurance costs would be $900,000 over 2 years because they re-rated it, and because he was within 50 miles of the coast. He was 34 miles inland, but it wasn't far enough so it scrapped it. It kind of blew up the whole project before they broke ground, before they got too far with it. But it was just unforeseen, rates and costs. But that's that Florida market. We're different here in Kentucky. Florida's a unique state for insurance. But
yeah, absolutely. Yeah, Kentucky market's completely different than it is in Florida. We're still seeing, pretty competitive rates.
So Commonwealth Insurance, they have you covered with personalized policies for your home, auto, business, and more. With years of trusted service, Mike here and his team are committed to protecting what matters most. So call 502-657-1114 or visit CommonwealthINS.net to get a free quote today.
I know that I am one of these people, so you're going to have to, you can relate to this because so often, and my clients, right? We're kind of impatient when it comes to trying to figure out this whole insurance thing. And so so it's almost like your phone doesn't ring for a few days and then it's all of a sudden, it's sort of like we're all waiting. We get something under contract, I find something. Now, all of a sudden your phone is ringing off the hook. How do you deal with all of, it seems like there is quiet and then there's urgency. How do you deal with all that,
Well, I wouldn't say much quiet. I mean, it stays pretty busy all the time.
Okay.
Phone rings all the time. Uh-huh. But it's just existing clients calling, wanting to go over policy reviews, new business. But yeah, it stays busy.
It's in the policy reviews, how people out there that have had insurance for a while, or the rates have gone up, or they're not sure what coverage they have. You can do free policy reviews and kind of give them another estimate or idea of what coverage they have, what they may need. Correct?
Absolutely. What we do on a policy review is I'll look at their current policy, and I'm an independent agent, so I have a bunch of other insurance carriers we look at. So first thing I'm going to do is price it out with the other insurance companies, make sure if their current provider, if we have a better rate with their current provider, we can move their insurance. If I don't find any savings with any other companies, we can go over the coverages. Sometimes if they're going to be fully loaded policy, they may need a little less coverage on elsewhere, so we can kind of play around with the numbers. And then the deductible is the biggest savings right now. The old school insurance, $1,000 deductible. Now you're starting to see people take $2,500 to a $5,000 deductible. Because before, when you got a $1,200 home insurance policy, the deductible did swing the price, but now insurance is jumping up to $2,500 to $3,000. You may be able to save $800-$900 a year by increasing your deductible from $1,000 to $2,500.
And that adds up. A couple of years, you recouped your money, and you recouped quite a bit of money if you got those type of savings. And that can vary from year to year. So it's important, talk to you, work, see what policies are there, what the costs are, and changing the deductible around is one way to you can save, quite a bit. Some people don't think about it. you've got a deductible they've been told they need, or they've stuck with that the parents had maybe, or that they've had for the longest time. And many times, I know I've been surprised to see, oh gosh, going from $1,000 to a $2,500 deductible, that's a big difference. Or, somebody's got higher deductibles, the $5,000 deductible, it's even more savings, but then he's got that potential outlay of paying a $5,000 deductible if you've got a claim, but hopefully you don't, claim. And if you don't, you realize several $100, hopefully of cost savings each year to make up for that potential higher deductible.
Well, absolutely. You're seeing, especially the higher end homes, you get in the $1 million, $2 million range where insurance premium may be $7,000 a year. Well, you jump that deductible from $2,500 to $5,000 and save $1,500, $1,600 a year. It's a lot of savings, so it does make sense for some clients to take higher deductibles.
So what has been one of the most interesting things you've had to, or items, whether it's, because I know you do property, you do auto and life, correct?
Yeah, I do home and auto insurance, commercial insurance. Our company does life insurance, so we have a couple agents in office that are strictly focused on selling life insurance.
Okay, that's great. And so, what has been the most interesting automotive, a car or truck or something that you had that you wrote a policy for that you were not expecting to write a policy?
Well, yeah, it was probably not too long ago. I've got a client; they own a custom auto shop. And they call me. This is after I've already wrote their Mad Max vehicle that had fake guns on the top. I already thought that was weird. And then they call me and they're, hey, we bought this fire truck. I was like, all right, and we're going to make it a low rider. And it's going to, on airbag, slam to the ground. I was like, all right, well, I haven't bought a fire truck before. Let's give it a shot. And to find out that it was a pretty long process, but we were able to get it done. They were happy. But definitely probably the craziest article.
So we got to know, back up.
A lowrider fire truck.
The lowrider fire truck. No, I'm talking about the Mad Max vehicle. See, you're going back to our childhood with that, right? So with fake guns on top, how do you isn't that like I don't know. How does that even work? Because it's probably constructed in a way that's more demolition derby-ish looking.
Oh, yeah. But yeah, we have carriers that do custom vehicles. So
okay,
we have to submit photos to the underwriter, and then we do an agreed value for it. But I was kind of shocked that some of those, I was like, oh, well, give this a shot. And they were able to write it.
Running a small business is hard. You shouldn't have to be an editor, a marketer, a brand ambassador, a videographer. We have, fortunately, Bespoke Marketing that does that work for us. You can reach them at bespokemarketing.org. Bespoke Marketing. Connections tailor-made.
So whether you're insuring just a normal house or a Mad Max vehicle or a lowrider fire truck, Mike's your guy.
Right. Give Commonwealth Insurance a call. You know what I'm saying, for all that.
And that cool. Sounds like something out of Hollywood. Mad Max video and a lowrider fire truck. Are you any relation to anybody in Hollywood by chance?
I mean, you're getting the cool things.
I do get that. Are you related to Danny DeVito? But no relation whatsoever.
Okay, gotcha. And so, how would you say the industry has changed since you got involved, since you started in the business? I'm sure you're seeing changes. I know the weather has been changing. You talked about that in the beginning. But what have been industry changes that you can speak to?
Oh, absolutely. Yeah, industry changes so the insurance companies have really invested a lot of technology on seeing what kind of risks they're on. So they're doing a lot of aerial imaging now. So I'll have, clients that have insured for years. When things were good, everything, these insurance companies didn't have a problem. Now they're looking at overhanging trees. So they're going through every single one of their clients, doing aerial imaging for every home. And if they see that you've got 3, 4, 5 trees just overhanging the house, they are non-renewing those clients.
So I'm so glad I had the guy in my yard cutting down trees the other day. I mean, literally, but yeah, I mean, I didn't realize. So if they're looking at Google Earth and they can't see your house because of all the trees, they're like, oh, that's a red flag.
Absolutely.
We got red flags and yellow flags here in the studio. But yeah, I mean, that's a red flag for the insurance company.
Absolutely. Yeah. We're seeing more and more trees falling on homes. I've been doing this 12 years, obviously. Never had a tree fall on a property. And I've had 5 in the last 2 years. So, from what I understand is some of that harsh weather we got, kind of killed some of the roots of the trees. And then, high winds, now we're getting storms that are producing 60, 70 mile per hour winds, and we're seeing a lot of trees go down.
I'm interested to hear about. I know you talked about the insurance companies are investing a lot in technology for to mitigate the risks and evaluate the risks a little more in depth. What other changes have you seen, technology wise? Because I think of insurance, I think it's a relationship business. You're talking with people, you protect their assets, you're listening to them. And technology can't necessarily replace all that. It may help you do your job a little bit better, but you still think insurance is a relationship or customer focused business.
For the agents, the insurance companies aren't going to know. You've got usage-based insurance with a lot of carriers now. You can go online and get a quote, and you can buy an insurance policy, never talk to an agent, but you don't know what kind of coverages you just bought. And that's the biggest thing, is to protect your assets. A, you want to make sure your home's insured to value, so if something will happen, they're going to rebuild your house and you're not going to be out of pocket. And B, it is covering your assets. So if you don't have enough liabilities, you buy a $100,000 liability policy. Say you have a couple rental properties, one of your tenants gets hurt on the property and sues you. You want to make sure your assets are covered. So where you $500,000 liability, and then you buy an umbrella policy as well for $1 million, $2 million to cover you. And when we're seeing a lot of the usage-based insurance, where I've got clients doctors that go online and buy an insurance policy, and to find out that they have state minimum coverage.
Oh God!
And it's like, hey, reviewing your policy, I don't recommend you buy this. So we're able to, as an agent interfacing with clients, we're able to educate the client what they're exactly buying, and that's how it should be. You should, if you just buy an insurance policy and you don't have a conversation with me of what you're buying, like we should have that conversation of this is what this covers, and and talk to the client, get to know their situation to figure out what insurance policy suits them.
One thing we didn't get to cover, or that I haven't heard yet, we talked about the storms and winds and such, but floods. You guys don't do flood insurance, or? Yeah,
we do flood insurance. We do FEMA, which every insurance company has. It's federally regulated, and then we have private flood insurance too. So the private sector got into the business. They don't do anything high risk. So if you live on the water and your house is on stilts, probably not going to write your insurance. But we've got some low risk areas where maybe some streams or rivers run through these neighborhoods, and they're technically in a flood zone, where the private flood insurance is going to be more competitive for that. But then if you get into FEMA, we're seeing FEMA too, because you got to think all the flooding in Florida and everywhere in Texas. We've seen FEMA rates really skyrocket over the last 5-6 years. So before, we were, $1,500 for flood insurance, and now it's nothing for some to pay $3,500 for flood insurance.
Wow, and earthquake insurance as well, right?
Earthquake, and that's earthquake is obviously you have to have it in certain areas of town that or certain states. Earthquake, we're seeing. Heck, we just had 2 of them recently, not in the U.S., but we're starting to see that. Now, people don't realize when they buy earthquake insurance, there is a high deductible on it. It's normally 10% of what your house is covered for. So a lot of people have $40,000, $50,000 deductible on their earthquake insurance that they don't realize, because the whole deductible thing is nobody explains what a deductible is.
Yeah, that makes sense. And so if you're just joining us, we are chatting with Mike DeVito of Commonwealth Insurance. Today's podcast is brought to you by AliSalesLouisville.com. Are you looking to buy, sell, or invest in real estate? Go to AliSalesLouisville.com. That's AliSalesLouisville.com.
And we were just talking about houses on stilts, and they can't see this on the video. They can't see this on the camera, right. But you work out, you don't skip leg day. So, how's your focus, on health, and how does that contribute to, professional performances and lasting, client connections.
I mean, the health and stay healthy obviously is good for you. You don't want to be. I mean, I normally try to do things to help my immune system and things like that. So you got someone that, I mean, I can't tell you the last day I took a day off work because I was sick, probably 15 years ago. So do try to stay healthy, active, and it does help because that's discipline, and it does help in the business aspect because you need to be disciplined, you need to be educated in your job as well. So it does transition over to focus, worth ethic on the business side as well.
Excellent. So I mean, it's pretty. It's interesting that we need the insurance, and sometimes we don't have enough conversations about insurance. And so, do you find that clients are underinsured? Are you finding some people underinsured?
Absolutely. So all our insurance carriers have replacement cost estimators to keep up with the inflating home prices. But also, I don't sell, you can buy an insurance policy, it's insured for this, but it's insured for 100%. I normally insure homes for 125% of the value up to 150% of the value. Mm-hmm. But we are seeing some insurance carriers that don't have the inflation cost built in. So their home may be insured the same amount for the last 10 years. Well, I'll look at their policy and say, I mean, you bought this policy 15 years ago, it's got $160,000 in coverage, but your house is worth $300,000 now. It's probably going to take $300,000 to rebuild it. So we do see some insurance carriers not having that inflation, but most insurance carriers now have that inflation rider to keep up with the market. So when somebody sees a rate increase, I'm like, well, it's, your insurance also, they're covering you for $80,000, $90,000, $100,000 more than they were before. So that is why you're seeing some of that rate increase, because the cost of insurance is higher.
But it's good you're letting them know, because if there was a catastrophe and a fire, something, or they lost the home, they're getting the home replaced and not having to come out of pocket or getting it replaced at only a fraction of the value, and then they can't afford to rebuild the house. I've seen that. It's
absolutely. I've got one story on. I mean, I had a total loss in a rural area of town, and she kept on. You're over insuring my house. I was like, well, I'm insuring it for, about $190 a square foot. They were in a area of town where the square footage to rebuild is lower on the market value. So they're, buying this house for pretty inexpensive for the size of the house. 3 years later, house catches on fire, total loss. And she called me back. How thankful she was of what insurance policy she had. So
wow, that's encouraging. And so it's really interesting because you also work with the Investor Tribe in multiple ways. You work with us on the Flip Savvy course. And so you also help a lot of the clients that we work with. And when they flip properties, you're helping insuring those. And we want to also thank you for finally getting on the podcast.
That's proud.
You know what I'm saying? So it was like, this is the final frontier. Like you've done everything else with us except join us on the podcast. So we're definitely glad that you can join us today. And we're definitely thankful. Can you come back and hang out with us again?
Yeah, absolutely.
Yeah. Thank you so much, man. And so, see, it wasn't that bad, Hampton. See, you were talking about how insurance is going to be tough, and it's
exciting world of insurance.
See how exciting that is.
Yeah, goosebumps. But we're glad Mike's here to explain it to us.
Yes, that's so true.
Review your policies. Reach out to Mike if you have questions. If you want a policy review, if you want a free estimate, he's great, and he'll really look out for you. So call him, email him, go on the website. You'll see his ad. You'll see his information in our bottom third. And thanks for tuning in to the Investor Tribe podcast. I'm Hampton Scurlock.
And I'm Milton Ali. And we'll catch you on the flip side of the Investor Tribe.
The Investor Tribe podcast is brought to you by the Investor Tribe, all rights reserved, featuring Hampton Scurlock and Milton Ali, executive producer Drew Cookenmaster, produced and distributed by Bespoke Marketing.